a lot of silver is controlled by the 70% as a byproduct. And so what's driving production of silver is not the silver price, it's the lead and zinc price, it's the copper price, and it's the gold price. Only 30% of that silver is actually being controlled by the silver price. So silver production is not totally geared to silver price.
Hello, everyone, and welcome to another edition of CEO and Market Expert Interviews. I'm your host, Lucian. Some of you know me as Triangle Investor from social medias. Today, I'm joined by Joe Mazumdar, editor of Exploration Insights. It has been a while, Joe. Welcome back to my show.
Yeah, thanks again for the invite. Really appreciate it.
Thanks. I want to start with silver. With the big fuss around silver, YouTube is full of headlines like vaults are draining, silver is going 50x, it is now and never for silver. But actually, silver has a problem of breaking this $33 level. What is your opinion? Why is that? And could we actually finally see silver close to 40 or maybe even $50 in the short term?
Yeah, I mean, silver, if we go with the gold silver ratio, the gold to silver ratio, like in terms of peak, like 120, something like that in 2020, I believe it was, and then it's come down to about 64. But in the last 3 years or so, it's been around 80 to 85. And so we saw a slight contraction this year, and most of that's probably been delivered in the last month or so as silver has outperformed gold. And so now silver is up year to date more so than gold, more so than any equity index in the US as well. So silver looks very good. And that's obviously had a knock-on impact on the silver companies, specifically the ones that call themselves silver companies. But the next leg up is the issue. Do we see more of a contraction in the multiple back to something like in the mid 70s or low 70s, which would provide more torque to silver, or does silver continue to hitch its wagon to gold? Doing the math on that, if the multiple stays the same, gold would have to go up, I think, about $43 to $4,300 an ounce or something like that, for silver to get to about 50. Or if gold stays the same, we'd have to see a contraction of the multiple down into the mid 50s, which we haven't seen for the last 4 or 5 years.
Yeah, definitely. How are you playing silver? What kind of profile of the companies would be a good bet for higher silver prices in the future?
Yeah, I mean, one is obviously, looking at royalties, but even with royalty companies, it's hard for them to get. I mean, they can get significant exposure to silver because, we know 70% of silver is a byproduct. And if you get a byproduct stream, which is great on a big base metal producer, that's like nirvana for a precious metal streamer. That's a good exposure. But with respect to companies, we've seen in terms of equities, a lot of leverage by the silver companies. So much so that the First Majestics and the Coors and companies like that have shown leverage in their paper, have used that paper to backfill their growth by buying single asset producers. So First Majestic bought Gato Silver, both in Mexico, and Coeur, which has also got Palmarejo in Mexico, bought Silvercrest today. So a lot of the single asset Mexican producers, developers, and that are being justifiably or unjustifiably, depending on your point of view, been discounted because of the Mexican geopolitical risk. Right now, with the new government starting, but definitely still AMLO led, the Morena Party, and there's pseudo anti-mining. They want to construct some kind of ban on open pit mining. They have basically killed exploration in the country as well. So you're seeing a lot less junior explorers there. So the companies that are already in Mexico that are looking for growth see an opportunity that they've got a more diversified portfolio. Their share price has done well, whereas a single asset producer or developer in Mexico has done less well. It might be worth using their paper on that. And and those acquisitions have been happening. So that's good for those companies and their shareholders.
Yeah, that's a good point. Joe, are silver miners making money at these prices?
Uh, According to my, like when I looked at Hecla and Coeur, not as much as the valuation suggest, let's just say. And some of them have a lot of debt, such that a company like, let's say, Coeur bought Silvercrest basically for their free cash flow. They're converting their paper into free cash flow. That free cash flow will help them with their own balance sheet. And the premium on their share price versus the discount on theirs makes sense for them. They're not offering cash; they're offering shares. So I think that's what we've seen. We've seen it's been less about balance sheet, it's been less about free cash flow generation, and more about the moniker that you're X silver. So that's why you're going up, because you provide torque. Because as we know, that silver dominant companies are few and far between. And so if you've got that moniker silver in this kind of market, you will show torque to the silver price, which they have. But unfortunately for those other ones, they've been discounted more because of that they're overly exposed to Mexico.
Yeah, I would like if we can cover, let's say, five big names, five big silver names in the space. Actually, before we do that, one other question. Is silver really manipulated, or do you think that is just a fairy tale, a show for the public?
I don't know. I mean, I don't get into that sort of. It's difficult. It's not easy to do. The Hunt brothers did it when the market was a lot smaller. It's a lot harder to do now in terms of trying to get a conspiracy around controlling the silver price. I mean, banks have done things before around interest rates, so I wouldn't put it beyond them because silver is obviously a much smaller market than trying to control interest rates on bonds. But I just deal with what I understand thoroughly. That stuff is harder to know and a lot more speculation behind it. But as we know as well, is that a lot of silver is controlled by the 70% as a byproduct. And so what's driving production of silver is not the silver price, it's the lead and zinc price, it's the copper price, and it's the gold price. Only 30% of that silver is actually being controlled by the silver price. So silver production is not totally geared to silver price. And most of these companies that are looking for growth in silver production have to look at base metals because those mines are bigger. It's harder to find a silver dominant project. And that's a bit of supply and demand. And hence, the more torque you get when you can show you're a silver dominant producer, developer, or explorer,
Yeah,
because that's hard to do.
yeah,
Geologically, it's hard to do.
yeah, yeah. What's your take on, let's say, Pan American silver? If you can say one minute answer, some pros, some cons, maybe.
Yeah, Pan American Silver. I mean, I owned them previously. I did well on them, but I kept them a bit too long. I still gained maybe 30 to 50%, but I had previously gained 100. Their problems at that point were operationally, which was they were very good reputationally with respect to operations, and they did a really good job of managing their balance sheet. They kept their debt low, and they also issued dividends. So all those things did very well for Pan American. But when they started having operational issues in their underground asset in Mexico, that that's what brought the share price down there. Their other upside is to bring Cascabel back online, which still hasn't happened. So the hope that that may happen has gone down lower and lower and lower, almost to zero. also the Navidad project, which is a big silver project, open pit silver project in Chubut in southern Argentina. Even with the change in the federal government that's more positive to foreign direct investment, the permitting and the resource is still controlled by the provinces, and that provinces is one of the one of the worst for mining. So I don't think that's going to change any. So now they've acquired a bunch of the Yamana assets, and they're going through all of that. They don't do a lot of exploration. They're more about M&A. And I think right now they're just absorbing the Yamana assets and seeing what they can, where they can go from there. But yeah, I mean, a Pan American, I'm not sure how much better they are now with the risk around operations, which they were good at. And that's one reason I sold it a couple of years ago.
Okay, same question for First Majestic.
Yeah, First Majestic, the issue has been their acquisition of Jarrett Canyon, because they always touted themselves as being silver dominant, Mexico only, and then they went out and bought a gold asset, a problematic one, deeply problematic one in Nevada that they've taken a lot of debt on. It doesn't make any money, and now they're using the cash flow from their silver assets to pay for that. So that almost deleverages them to silver. Now, to get around that, they bought Gato Silver to increase their exposure to Mexico and also increase their exposure to silver, which I think is probably a positive. They do a lot of marketing, and so that helps with respect to getting their name out there with respect to silver. But yeah, that that overhang of Jarrett Canyon is what would worry me about that company.
Okay, next one would be Dolly Varden Silver. Is Sean doing a good job over there?
Yeah, Dolly Varden, I went to visit that one, and their geos on site found mineralization in these, I believe, east-west cross-cutting structures that suggest that the mineralization goes deeper. And then they just put out a new resource. And one great thing about them is they're constantly drilling. I mean, they drilled a lot, and they continue to drill a lot. And so that's always great for those retail market that's interested in drill results. So that's been good. BC has been problematic with the potential changes in the Mineral Tenure Act to give more weight to the First Nations groups in terms of potentially giving them an upright veto or not being able to take new concessions. That's not a problem for Dolly Varden and people that have them now, but could generate a Mexican style issue with respect to concessions going forward. But yeah, Dolly Varden, I think that's well funded, and they raised a lot of money recently, but also they spend a lot of money because they're generating a lot of drilling results, and so I think they had 3 or 4 rigs operating when I was there.
Okay, one Mexican name. It has projects in Mexico and some spectacular grades reporting recently, and that is Vizsla Silver. Are you following their story?
I don't follow it as much as probably I should, but I mean, yes, they've got high grade. It's underground. I think they fully acquired the asset. They're growing it. So yeah, all positive. Their discount again is Mexico, but it's underground. But I worry about this new government because I mean, she got in with even a bigger majority than AMLO, but the reason she got in was because of AMLO. And so for people saying that, oh, she's going to do her own thing, I think she's probably on a short leash with what she can and can't do, considering that most of, the reason she got where she was because of that guy.
The fifth silver name would be Mag Silver. What's your comment on that?
Great deposit, again in Mexico, underground. They don't operate it, but I mean that should generate pretty good cash flow. And whatever happens with Mexico might have an impact on upside in terms of new growth, new assets, more concessions, something like that, but it won't impact their operating asset.
Okay, let's cover gold. We will cover also five companies, but before we do that, let's cover a bit the macro story. How do you see gold going forward, and when will this disconnect between gold price and the gold equities slash miners weaken?
Yeah, I mean, so if we go through this year, 2024, the first half of the year, most of the buying on gold, which was, contrarian, because we saw, the real interest rates actually going up as the Federal Reserve was not cutting rates and inflation kept going. So real rates were going up. Uh, and at that same time, we would have expected gold to flatten or go down, but it stayed going up. And the reason it was going up is because central bank buying, a lot of it was from the East and a lot of it was from China. That stopped in the summer. And then gold's just sort of, flatlined and during the summer. And then what we had was the anticipation of the interest rate cut by the U.S. Federal Reserve. Was it going to be a cut? Was it going to be 25 basis point? Was it going to be 50? And that anticipation brought in a lot of buying into gold ETFs, but not only from the Europeans, but then you saw the North American buying. And once you see the North American buying, that slips into equities, goes into the big gold equity ETFs, the GDX, GDXJ, and then trickles down into dividend paying majors, and then down slope. But what we've seen more so has been the producers, that impact, the financing risk on the smaller companies is still there, but some companies did get financed. Like you mentioned, Vizsla, they got a big bought deal, and we've seen other people get acquired, and we've also seen some people get financed. And if you look at the S&P Global Market Intelligence data, like the first half of the year, gold was down about 10% in terms of overall financings. But if you compare the first few months of the second half of the year versus the first few months of last year, that number was up 90%. So suggesting that we've had a turn. And most of that turn, I believe, was led by North Americans starting to take notice of the gold price, that the fact that the real rates were going down or the trend was going down, and that converted into equities, and that converted into financing for the chosen companies, let's say, not for everybody, but for select companies.
Yeah, I have noticed that we have a lot of new gold investors, new young people investing in gold. And personally, I got a lot of messages asking me what should they pay attention to when it comes to gold and gold investing. And I always say I'm more of a uranium guy, copper guy, less gold and silver. But you're the right man to ask that question. What should investors, new gold investors, pay attention when it comes to gold and gold investing?
Okay, so the first thing is that you've got your own thesis that gold's going up. So if you've got that thesis, now you want exposure to gold. So the easiest thing to do, I mean, it depends on your timeline, one thing, and then it depends how much work you're willing to put into this. If you're very passive, do passive investments. Buy a gold ETF. If you want more torque, and gold equities weren't providing a lot of torque through 2023 and the first half of 2024. They're providing a little bit more torque now. So then an equity ETF like your GDX or your GDXJ or something similar. So, and then if you want dividends as well, and you're interested in that, then you get into the Agnicos and the Newmonts of the world. Look at who's paying the best dividends and whose dividends are the most sustainable. If you want growth, then you're looking at the intermediates, and that's more work to check out balance sheets, to check out, share structures, more on management, more on individual assets, what's happening, blah, blah, blah. And that's more work. And there's still even more work for a junior single asset producer and infinitely more work for the non-cash flowing juniors, whether they be developers or explorers. So I would suggest anybody that's just getting into it, start at the top before you start with, oh, hey, I can get a 10 bagger out of this junior explorer without understanding what you're doing, because you'll get burned. And then it's a problem for the entire industry that we sell people on it and then they can't do the work, and suddenly there's a news release that they don't see and the stock goes to zero. There's no liquidity. And so I would manage it by liquidity as a direct correlation on the time you're willing to spend on your investment.
That's a good point. Let's cover those five gold names. We will start with Newmont. What's your take?
Newmont's good. They just bought Newcrest, and now what news you will get as an investor is them trying to achieve their goal of these multi-billion-dollar divestitures to tell everybody that, hey, this acquisition of this company, which was Newcrest, was accretive. What was nice about getting Newcrest was they bring a lot of block caving expertise, and a lot more people are going underground. And block caving costs are almost like an open pit cost, but you're just doing it underground. The big thing is capital, and the big thing is expertise at doing it. And those would be applicable to the low-grade porphyry gold deposits that these companies are looking at, because gold tends to get constrained into about an 8 to 10 year reserve life, whereas porphyries can be multi-decade. And so those companies are interested in longer base assets, and those tend to be gold-rich porphyries, and those tend to be mined by block caving nowadays. So that was a good technical merger as well. It gives them more diversification, but gives them the ability to look at assets and prioritize different assets. So one asset that might have been high priority with Newmont prior is now a lower priority because they found one with Newcrest that's much higher priority. But what you're going to see a lot of is the divestitures.
Yeah, yeah. B2 Gold.
B2 Gold was when I did my review for my subscribers about a month ago before the Colorado Gold Show. I was looking at the first half results. That's one I selected that would be one to own, because it's been hurt by its development of the Back River Gold Project in the Arctic, which has taken longer and costs more. And so they've had to, basically get on that one. And they also had issues with Fekola, renegotiating with the Mali government, which they just did. That was another issue. And I think they can turn that around. So, B2 Gold, I think, is one to look at in terms of that.
Yeah, agreed. What about Sandstorm Gold?
Sandstorm Gold is one of these royalty companies we're talking about. Their big issue, I would say, is hot maden. So they did a bit of financial engineering to create this new company that would own the 30% equity interest of hot maden, and then spin back a stream to them on the copper and the gold. And so financially, they would get discounted as a stream and not discounted as an equity interest in an operating asset, which is what they were doing. And so that worked for a while, but then unfortunately we had the accident with SSR Mining and Chopler, which was the heap leach pad, and now their reputational risk as an operator has gone to zero almost, and they're the ones that are operating hot maden. And so their ability to permit and develop that project is now in question. And that's a big part of Sandstorm's growth. But Sandstorm has another big growth project that I don't think a lot of people talk about, is their stream on Agua Rica. So Agua Rica is a big gold-rich porphyry in Argentina. And it's never been developed. And one big issue has been, potential tailings issues. So Glencore also owns Alumbrera, and now that asset is almost on the border of reclamation. And so now, problematically, I mean, they want to develop Agua Rica, but then mine it and send the ore to Alumbrera. If that's possible, and Glencore is really pushing it, that stream that Sandstorm have will be, that'll be very lucrative.
Yeah. Do you follow Alamos Gold by John
Yeah,
McCluskey?
yeah, Alamos has done ridiculously well, and they did a really good job of managing their geopolitical risk, because they had assets in Turkey and assets in Mexico, which both have become problematic. But their big acquisition, almost 10 years ago, was the Island Mine by buying Richmont, and now all their growth is all about Ontario. And so that lowers the geopolitical ramifications of Turkey and Mexico. And they've done a really good job of turning that company around. High grade underground in Ontario is really appealing to a lot of people.
One name that is lower on the scale from the mentioned ones is Gold Mining Inc. Run by Amir Adnani. Do you know about that company?
Um, I'm not sure. Is that the one that they have? God, it's an asset in Ontario. Is
No,
that
they
the one?
have multiple assets across the Americas. They have it in Brazil. Okay, but never mind. If you don't know much about it, I have a reserve. Tell me more about IAM Gold if you know more.
So IAM Gold was always a very highly leveraged company. I used to own it at one point, in the last gold cycle, thinking that, okay, I want the big beta to gold companies. But unfortunately, management there at the time tended to screw up their beta to gold by doing something stupid. Management has changed. So that would be the one thing I'd be looking at. They brought Cote online, and now it should be producing, and so that's a big open pit. Low grade meaning zero point 0.9, I believe it is, gold producer in Ontario, which is good in terms of geopolitical risk. They have assets in South America. They tend to be America's focused. I would just watch management on that one in terms of thinking about leverage. But they were always very good with respect to leverage.
Yeah, fair enough. Let's cover copper as well. How do you see copper market situation right now, and how do you see it going forward?
Okay, so a part of the issue with copper right now is the negative sentiment near term because of problems in China. And so we saw a big boom in that last week as China introduced these, cutting interest rates, injecting liquidity into the state, which boosted, these companies in anticipation of more construction and things like that. So whatever we want to talk about, electric vehicles, all this, green energy stuff. Near term, we're still highly dependent on, China with respect to growth in copper demand. And they also are the owners of 50% of the smelting capacity. So they're integral to the copper market. But what we've seen, and this is where I'm bullish on copper, is that the contraction of supply. Panama being taken offline with COVID Panama, which, drove TCRCs at one point to negative. And if you've got a clean concentrate, the TCRCs are very favorable for you. And then if you look at, projects being developed, people are fearful about the capital intensity of these projects at the incentive price right now for copper. Even though the copper price looks high, it's not enough for some people to trigger a construction decision. And so that gets delayed. And so all those delays, some production being taken offline, problems with permitting big projects like Pebble, Resolution, and other projects, and Chile being a little bit more left to center, Peru, longer time to permit, the two biggest copper producers. A lot of people don't want to do the DRC, even though it's the third largest producing country right now, which is competing with Peru. Has made people like Barrick looking for growth in copper go and expand Lumwana in Zambia and build in Pakistan because they just feel it's easier to do it there.
Yeah, let's cover copper stocks. I want to start with Brixton Metals. Actually, that's my big position I have. Sorry. Uh, Thorn, Metla, there are a few targets over there at Thorn. Brixton didn't find the mother lode still. It's the missing part, right? So, do you believe with this drilling, recent drilling, they're more close to finding that mother lode? Because the reported grades are not so good, so to say, in my opinion. What's your take on Brixton
I mean,
drilling?
it's a big land package. I visited it this year, this summer. It's a huge land package, and they've got lots of targets. And I think the best way to attack this land package, and if people are, looking for these porphyry copper gold projects in this part of British Columbia, we've got Seabridge doing their feasibility study on the KSM project, six-ish billion dollars. You got Galore Creek down there. That's probably going to be around the same number. Uh, these are multi-billion dollar projects to build, but Brixton is at the exploration stage looking just for the resource right now. But I think given the number of targets they have, the different style of targets that they have, and the fickleness of the retail market, because their retail has got a short wave investing timeline, whereas exploration needs, 3 to 5 years plus. That they probably need a strategic investor in there that helps them year to year. I know that they have flow through, but after 4 months, most of those guys sell anyway. So their advantage is they have flow through and can keep going to flow through to raise money at a premium. But it would be nice, I think, if they had some kind of deal where they had a big company backing it with deep pockets that they could go out and drill, do more geophysics, hit the land package more evenly, prioritize, and then drill with a bigger budget potentially.
Yeah, but they also they have a deal with the BHP, if I'm not.
Yeah, but that's equity. That's
That's
not
equity. Yeah,
that's not a property project earn in. The
yeah,
problem with equity is you spend it pretty quickly up in that part of BC where you're all helicopter supported drilling. It's not hard to spend that kind of money.
yeah. You are right about that. Next on the list, if you follow Faraday Copper.
I went to that one several years ago. I think it's several years ago, 2 or 3 years ago. And that's from what I saw at the time, a lot of breccia related copper mineralization. So you get these high grade portions. And so you got to put that all together. So I think it's a combination of open pit and underground. I think the underground will cost quite a bit. So yeah, it's interesting. It's in Arizona, and I think they've done a lot of good work on it. But I'm not sure about the open pit underground ramifications of the size of the deposit that they're working on.
Okay. Lundin Mining.
Lundin Mining has done well in terms of, as they brought Candelaria down, they bought Caserones, which I think was a great purchase because they can use the infrastructure at Candelaria, especially the water. So the big constraint on Caserones was their lack of water, so they could never run the plant at 100% capacity. And so the access to water will allow them just to do that, which is a huge boon for Caserones. But also now they're doing active exploration on it, which the Japanese weren't willing to do because they couldn't even run the plant.
Okay. What about Teck Resources?
Which obviously blew out their budget and generated a lot of debt. But I think they're well exposed to a rising copper price now. And as these companies look to consolidate and look for more copper assets, that might come back on, in terms of being a takeover target if the Canadian government allows it.
Yeah, yeah. Final Copper, Ivanhoe Electric.
Yeah, Ivanhoe Electric, is Santa Cruz project. That's the one I'm more focused in on, in southern part of Arizona near Casa Grande. Underground, good grade, great promoter and Robert Freeland. No problems with access to capital. The way I'm playing that is more that I own shares of Arizona Sonora, which is to the north. Their deposit is closer to surface. They have infrastructure and they have access to water. And in terms of valuation, I'm playing more that district with that company.
Okay. Joe, do you follow uranium?
I did. I don't own any uranium stocks now, so I'm not up to date in all that's happening there. I know there was a ban on Russian imports, and that spiked up uranium recently and helped uranium equities. And the problem that I have right now with uranium, a lot of the uranium M&A was by the Chinese, and it appears to me that Cameco has taken a step back on buying development assets by going downstream with respect to the uranium market and into Europe. Uh, so in terms of bidding, I don't know. We see Paladin come in for fission, but that's still not been approved yet. Because now it's the Chinese that are playing the game and saying that they don't approve the
Yeah.
acquisition because they own a significant bit of fission. So, yeah, the M&A is the one that I'm of development plays that I'm concerned about.
Okay. I have two more questions, then I will let you go. What other commodities besides precious metals, copper, are on your radar you are bullish on? What other commodities?
Well, I mean, critical minerals has gone down a bit, and if you went to Beaver Creek, which will take any other kind of metal if it's vogue, there was a lot less critical minerals at Beaver Creek. Nickel projects, zinc projects, some copper projects, and that were there were a lot less. And I think we've seen that with the financing for specialty minerals, it has been down quite significantly, so they're having trouble funding. And so I still look at some of these, but it's got to be very like have a big comparative advantage. And most of critical minerals is all about processing. It's not usually mining, it's processing and what product you produce and which way is it going? Is it going to China or is it going to the West? Because the West will help you fund the project, but they can't change the price of your product. So that's the problem is that they can give you grants, they can give you very low interest loans, but do you have the incentive price to build that project yet? And most of them don't.
Yeah. Final question, Joe. Who are, in your opinion, the next superstars in the mining sector, in the mining industry? The next Friedlands, Lundins, Eric Sprotts? Is there, can you name me, let's say, five people that could be the next superstars in the mining space?
Five?
Yeah.
That'd be a push. Uh, no, I work more on individuals that have a lot of varying skills, and I see a lot more of that variety of skill sets on the ASX than I tend to see on the TSX listed companies. I'm not going to go through a bunch of names, but there's a big difference in the TSX versus the ASX. ASX has been better at funding projects right now because of partly because of the superannuation funds, but also in terms of the Lassonde curve, they don't do the Lassonde curve like we do on the TSX because a lot of these companies come in with the idea that they will build the project. And so in terms of filtering, the filtering for management and asset is much higher because they're thinking like we do at Exploration Insights. What's the end game? Metallurgically doesn't work, infrastructurally doesn't work, is a social license to operate there. Whereas more in the TSX, we're worried about, that high grade result that might be a redrill of an old hole. So management gets filtered a lot better on the ASX than it does on the TSX because people are more worried about the end game and they want management to have those skill sets.
Okay, okay. Final message to investors. How can they reach out to you and how can they become subscribers of Exploration Insights? And actually, what do you offer in your services?
Yeah, so Exploration Insights subscription-based a newsletter on the mining sector, mostly on non-cash flowing juniors, but we do add, producers every now and then when we want, significant leverage or royalty companies. Yeah, so it's weekly. My background is geology, working in a little bit in Canada, but mostly Australia, South America. And then doing a master's in that, and then doing a master's in mineral economics, such that I started working in finance. And I usually work for big companies like your RTZs, your Newmonts and Phelps Dodge. And then I became an equity analyst when I moved up to Vancouver, and I took over this letter almost 10 years ago now from Brent Cook. And so, yeah, And there's a lot of free stuff on the website, explorationinsights.com, so you get an idea of what we do. And if you're interested in subscribe, there's a subscribe button right there.
Joe, thank you very much for coming to my show. It was a great chat, and let's catch up sometime soon again.
All right. Thank you very much.